Hello and welcome to the Stock Planner channel. In this video, I'm going to talk about Adobe and why I think it's going to go up, why I think it should be on your long-term watch list. And even though a $500 stock is not a good stock for beginners with a small amount of money, it's a stock worthwhile to put on your IRA, and beginning traders should practice trading more expensive stocks. As a swing trader, I do not recommend having a bunch of $1 and $2 stocks, penny stocks. As a swing trader, we are looking to capture the tops and bottoms and the trend in between. This is not a trade recommendation. I hope you'll do your own due diligence, but I believe you'll get a lot out of watching this video. Let's get started. So today we're looking at Adobe, ticker symbol ADBE. And the first thing we look at is the stock price at $504. This is an expensive stock, so a beginner trader will probably not want to trade this. They're trading with $1,000, $2,000 starting cash. It doesn't buy a lot of shares, 2 or 3. To buy one share with a $1,000 account, it's 50% of the account. So it's a hard one for a beginner to trade. But if you're an option trader with a margin account, this is a good, strong stock. Look at this. Last 7 days, it went up almost 4%. And over the year, 34% price increase. Well, what's causing that? The answer to that question in just a little bit. Adobe is a software manufacturer. Companies worldwide use this product. The price to earnings ratio, or is it a good value compared to the industry? And it says this analysis indicates that it is. And the earnings are forecast to grow 13%. This company, this is Snowflake, and you want it big and green if you can. But it's very healthy. It's got a pretty good future ahead of it for growth, and it's undervalued. I'm going to see from this chart, it has grown tremendously. In October, it was around $300, and now it's over $500. You can get a clearer picture from FinViz. It draws these nice, pretty little lines. But you can see that it's profitable with positive PE there. It's got a buy rating using FinViz's rating of 1 to 5. Shortable, optionable, I like that. And the target price is $537, which is higher than it is today. That's 1 year projection. Looking at the valuation of this stock, they got a check mark on price to earnings versus peers and price to earnings versus the industry. But it's got negative check marks on the analyst forecast and below fair value. Let's take a look. Here's his peers, Intuit, Quicken, Autodesk, and here's Adobe. So according to this chart, it's at a good value compared to its peers. The current PE for this stock is 47.4, and that's about what it should be. Again, the current price and the fair value, and it's closely aligned. It's had a couple good days here. It's about 3% overvalued based on the discounted cash flow model. Not too bad. And according to Simply Wall Street, it's slightly lower from FinViz. The 1 year target price is $522. This is a stock that's covered by 32 different analysts. They get paid to do this. Looking at the future growth, we have the revenue increasing steadily, like that, and the earnings. There's a slight uptick. It's not flat. The company versus the industry for earnings and revenue, it's on par with the industry. And you like to see this projection for earnings per share forecast. Still got to figure out what's going on with why this stock is moving so, the price is moving so rapidly right at the moment. Return on equity measures the amount of pre-tax profits a company can generate from the capital employed in its business. In the case of Adobe, it's 32.7%, and this is considered high. 32% versus the industry of 10. So Adobe is getting good return on what they're investing back in the company, which indicates a smart company, smart use of resources. Again, the same thing with return on assets. Company 17%, industry 6%. And in the last year, Adobe, as you noted, was 31%, but 3 years ago, it was only 23%. So they're doing a better job overall, year over year. So returns on equity has increased significantly over the last 3 to 5 years. This fact makes me confident that Adobe is a good, strong company with smart managers applying and making decisions, applying in resources that are increasing its business and profits for the shareholders and stockholders. The financial health of this company is very strong. Long-term assets versus liabilities, wow. Wish my business was in great shape like that. Short-term, they're good shape too. No dividend, and a lot of institutions own this. Their take on Adobe is 84%, 85%. Again, at $500, this is not going to be for a beginning trader. But it's such a strong company that it'd be great for your IRA or an intermediate investor, especially one that can use options. We'll look at that in a minute. The point I want to make here is that Adobe has a lot of long-term prospects. In the last few weeks, it's been on a rise, and I think we're going to have a small pullback, which makes a buying opportunity long-term. And long-term is what I want to talk about as my next point. All investors, beginner, intermediate, and pros, all need to have a short-term perspective and a long-term perspective. Let's take a look. One of the things I do is I trade from a watch list of 145 different stocks, all of which I can tell you what these stocks do. I know the names, and I'm a little familiar with them. These are stocks that I trade every day, and I can scan quickly through that watch list to see if I'm looking for some kind of trend or indication. This is RSI, and it seems to be overbought at the moment, and maybe pulled back, and looks like that little red dot there. Anyway, Adobe is on that watch list. I do not scan each morning for a bunch of stocks that meet certain technical criteria, stocks that I've never heard of. I only want to trade stocks that I know and love. This spreadsheet is called prediction, but nobody really can predict the market. All you can do is take a guess. Anyway, I have a long-term projection of stocks I think are going to go long-term, and this is the list of those. And I have a short-term of stocks that I think is going to go in the wrong direction. And you can see this is GameStop, and I'm guessing that wrong. I just don't like GameStop. I need to go ahead and take that off that list. But we're looking at a long-term perspective, and Adobe is on my list. And since when I put on the list, which was on April 1st, around that area, performed about 24%. I've been doing the long-term projections for a few months now in an effort to communicate on YouTube. But I have done it and tried to predict the market for the last 30 years. And I've just started to do the short term in the last 2 months because it looked like this is kind of keeping me on track. It's like giving me a roadmap. Anyway, it's an easy thing to do, whether you're a beginner or an expert, is to pick 5 or 10 stocks that you think is going to be 10x or 5x for the decade or for the year. In my case, it's for the year. And in my case, I try to sell option spreads about 6 months out. What's on your list for long-term buy trades, long-term buys? I'd like to know. I'd like to know what I should replace on this list. I just added Meta and took off Estée Lauder. Adobe is and should be on a watch list long-term. Leaving this area, I just want to leave you with a question. Do you trade from a watch list, or do you trade a stock based on a whim or some news, something that you've never traded before? Or do you do trade something that you regularly trade 2 or 3 times a year? I think the key to success and to be consistent is to trade stocks that you know. Looking at TradingView, which is an almost free charting package. A lot of people are using it. It's very cheap too. It allows you to do some alerts, and I like it. Anyway, there's tons of free indicators here that you can use. I happen to be using off the shelf MACD, stochastics, and the RSI, and can easily see that price increase. And this is the zigzag indicator. It's a perfect indicator. It puts these lines at the tops and bottoms, and that's the job of the swing trader is to pick these tops and bottoms and then take the trend in between. And the zigzag does it perfectly, but it does it because it looks to future data and then paints these things perfectly after it's happened. But unfortunately, we don't have that ability, and so we have to make a decision now. And we see the stochastic is pointing up, but the RSI it's overbought condition and looking like it come around. That's what's happening here. We have a little red candle today when the market has been basically up. It's just a reported inflation data. So it'd be nice if you could wait a week or two and try to capture Adobe at a cheaper price. I think the stock is going up, and I think it's going up for the long term. But still, you're faced with the problem of this stock is $500. Let's take a couple look at some option plays. Now we're looking at Adobe, and we're going to a tool called Option Strat. It's a simulation visualization tool for options. It's free, and we're going to pick a bullish direction, but we're going to keep in mind that we're just keeping this on the back burner because we're going to wait a little while to make this trade. Now we think it's going to be bullish over the next few months. So let's choose October, and these are the options we have. The two I like always, by the way, you can't use a short put because you need too much collateral. The two I like to use is a bull put spread, and this particular option that they're recommending, you still need $5,000, and then the broken wing. I like that because it gives you a lot of ways to win. In this case, the stock is so expensive, we'll look at the bull put spread. Again, Adobe, $503. October 20th expires, and this requires selling a $590 put for $88 and buying a $475 put for $1770. And the difference in this price is going to be $70, and that gives you a credit of $7,000. But you have to put the $11,000 margin with a max loss of $4,000. That's a good risk reward, but I don't want to tie that much money until October. So what you can do is bring this in and sell a 510 and buy a 500. Now you only have a risk of $1,000, and you get nearly half of that in your pocket. So the max loss is the difference between those two, and it's $530. And it has to go up. If it goes up to 520, which is what Simply Wall Street is predicting, there's your win line right there. And if it goes a little higher, there's your win line. Of course, there's the lose line too. If it goes down by 5%, by middle of August, you'll lose $182. Playing with this, we'll move it down to 500 and make this 490. And now our break even is 495. So it has to stay where it's at or a little above by October, and then you can win the $417. But I'm going to wait for a pullback and come and bring this down to 490 and 480. Now, really, this hasn't happened yet, and we'll get more money here in our pocket about what we just had, another $100 because of the time shift. But it gives you a greater distance to make your 520, which is what the target price is. And this makes more sense if you think a pullback's going to happen. And the nice thing about it is you can set this now. Since you did all this analysis, you can go to your broker, sell a 490 put and buy a 480, and put your purchase price at $100 more than it is now. And when it gets there, if you think it's going to get there, if it gets there, your order will execute. In other words, you put where you think it's going to go in the next week or so. You think it's going to be a pullback, but you want today's income, which was $100 more than this. And so you put your target price, your purchase price, or selling price at $463 or $470, about what it was here, $417. Sorry about that, but it's still. I always put $100. Okay, I'm trying to get it, and you got plenty of time for a win, October. So once I do all the work, and I don't want to do an execution of a trade at the moment because I think it's too high, I wait for the pullback and get my price. I hope you understand that. Anyway, what do you think of this trade? Do you think Adobe is a stock for the future, stock for the long term? Is it on your long-term buy list? Is it too expensive to trade regularly? These are questions you must ask. I'd be interested in some feedback. That's all I have for you right now. What I covered in this video was the fact that return on equity is causing Adobe to be a very attractive stock. It should be on your long-term watch list. And even though you don't want to buy a stock right now, you can place a trade with your broker and have it execute at a desired price in the future when it reaches that. Let your stockbroker do the work for you. Happy trading. We'll catch you on the flip. Remember to like and subscribe.